The world of finance is always changing. So the big question is, where should you actually put your money in 2025 and 2026? Today, we're going to dig into Ankush Mukundan's guide to figure that out.
And this, right here, is the question on every single investor's mind. It's not about chasing some fleeting trend that's hot this week and gone the next. It's about really understanding the deep, fundamental shifts happening in our economy. So let's pinpoint where the real potential is hiding for the years ahead.
Okay, so before we dive headfirst into specific stocks or sectors, we have to zoom out and look at the big picture. Let's break down the key forces that are going to be shaping pretty much everything in the 2025 financial landscape.
Now, you've got to remember, these four things aren't happening in a bubble. They're all tangled together in some really powerful ways. You've got incredible AI advancements smashing up against huge government pushes into clean energy, and it's all happening against this backdrop of inflation worries and geopolitical shakeups. The big takeaway here? No investment exists in a vacuum.
All right, so with that context in mind, let's start to narrow our focus. We're moving from the what's going on to the, okay, so where do I invest? Let's explore the absolute top sectors for growth right now. First up, and this probably won't surprise anyone, is technology. But the real story for 2025 isn't just about AI as a cool new product. It's about AI becoming the new utility. It's like the electricity of the 21st century, the foundational layer that's going to power everything from massive data centers to brand new drug discoveries.
And look, you don't just have to take my word for it. When giants like Morgan Stanley and JP Morgan are pointing to these massive investments pouring into the nuts and bolts, the data centers, the digital infrastructure, that's a huge signal. It tells you this is a deep, structural shift. We're not just talking about some software app. We're talking about building the very foundation for the next decade of innovation.
Next up, we have a sector that's being pushed forward by two incredible forces, global necessity and powerful government tailwinds. And that is clean energy. The worldwide shift away from fossil fuels is picking up speed, and that's creating this giant wave of opportunity in things like solar, wind, and especially battery storage.
For example, when a massive economy like India launches a huge program like the Green Hydrogen Mission, it sends a really powerful signal to the entire market. This isn't just talk. It creates real, tangible opportunities for investors like you to get in on the ground floor of an industry that's just set to explode.
Okay, our third key sector is healthcare and biotech. Now, this area has always been pretty resilient, right? People always need healthcare. But right now, it's an absolute hotbed of innovation. Spurred on by everything we learned from the pandemic, a whole new wave of discovery is happening, and it's offering some serious growth potential. And the innovation here is it's happening all over the place. AI is making medical diagnoses faster and way more accurate. You've got therapies being delivered through software on your phone, and new platforms are making healthcare more accessible than ever. Seriously, this isn't science fiction anymore. This is stuff that's transforming the sector as we speak. So, we figured out the where: tech, clean energy, and healthcare. Awesome. Now let's talk about the how. What are the actual tools you can use to build a portfolio that captures all this potential? Let's open up the investment toolkit.
I love this analogy. Think of your portfolio like a high-performance car. Stocks, they're the engine. They provide all the power for growth, especially in those exciting sectors like AI and healthcare. But, every powerful car also needs fantastic brakes and a great suspension system. That's what bonds do. They give you stability and predictable income to smooth out the ride. A really smart portfolio needs both to get where it's going safely.
So, what if you want to invest in real estate, get a piece of that pie, but you really don't want the headache of being a landlord? Well, that's where REITs come in. They basically let you buy into a diverse portfolio of properties. We're talking everything from apartment buildings to giant industrial warehouses, just like you'd buy a share of stock. It's a fantastic way to get exposure to the real estate market with both liquidity and diversification.
All right, so beyond the big three of stocks, bonds, and real estate, there's this whole other world of what we call alternative assets. And these investments, they can add a really unique and often totally uncorrelated source of returns to your portfolio. It's another powerful layer of diversification. Now, get this, and this might sound a little crazy, but the fine wine market has actually outpaced traditional stock indexes in recent years. This just goes to show you that value can be found in some really unconventional places. Now, it's certainly not for everyone,
but assets like wine or art or collectibles can be a pretty potent hedge when the main markets get uncertain.
Okay, and let's round out our toolkit with 3 more essentials. International funds, well, they're basically your passport to global diversification, so you're not putting all your eggs in one country's basket. A small, strategic slice for digital assets can add a high-growth component, and of course, good old commodities like gold are still a classic safe haven when things get turbulent. Each one plays a really distinct role in a solid strategy.
All right, we have the sectors, we have the tools. Now, let's put it all together and build the master plan. These are the core principles for creating a smarter portfolio that's really built for the years ahead.
Think of these 4 principles as your North Star. Number 1, diversify across different assets. Seriously, don't bet the farm on just one thing. 2, be intentional and focus on those high-growth sectors we talked about. 3, blend the best of both worlds. Use passive index funds for low cost, but also active funds to hunt for those unique opportunities. And 4, think globally to help protect your portfolio from regional shocks.
So, what does this actually look like in practice? Now, of course, this is just a sample. Your personal mix is always going to depend on your own goals and your tolerance for risk. But just notice the balance here. You've got your growth-oriented assets like stocks, but they're complemented by stabilizing ones like bonds, with real estate and alternatives providing even more diversification. This is what the architecture of a resilient portfolio looks like. Whew. Okay, we have covered a ton of ground. So let's take all of that and distill it down to a simple core strategy for 2025 and 2026.
Let's run through the final checklist, your game plan. First, target those big 3 growth sectors: tech, clean energy, and healthcare. Second, build your portfolio with a diverse mix of tools, not just one. Third, don't keep all your investments in your home country. Diversify globally. And finally, and this is so important, remember that investing isn't a set-it-and-forget-it kind of deal. You have to stay informed and be ready to adapt.
I think this quote just hits the nail on the head. It really captures the spirit of what it means to invest today. The landscape is constantly moving. Success isn't about looking in the rearview mirror and chasing what worked last year. It's about understanding the deep currents of change that are happening right now and positioning yourself to ride those waves into the future.
And that really brings us to the final and maybe the most crucial question to leave you with. The future of investing is all about adapting. So, is your portfolio built to win?